Expleo Solutions conference call. Please stay connected. The call will start shortly. This is the Expleo Solutions conference call. We request you all to please stay connected. The call will start shortly. Thank you. Ladies and gentlemen, good day and welcome to the Expleo Solutions Limited Q1 FY2022 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from Christensen IR. Thank you and over to you.
Thank you, Stanford. Good afternoon to all participants in the call. Welcome to the Q1 FY22 earnings call of Expleo Solutions Limited. The results and investor presentation have been already mailed to you and they are also available on the company's website. In case anyone does not have a copy of press release or presentation, please do write to us and we'll be happy to send you the same. Representing the management today, we have Mr. Balaji Vishwanathan, Managing Director and CEO, and Mr. Desikan Narayanan, Chief Financial Officer. Mr. Balaji will start the call with brief overview of the quarter gone by, which will be followed by Mr. Desikan, who will be getting into detailed financials. After that, we'll open the floor for Q&A session. As usual, I would like to remind you that anything that is mentioned in this call which gives any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual report, which you can find it on our website. Having said that, I now hand over the floor to Mr. Balaji. Over to you, sir.
Yeah, thank you, Asha. Thank you so much. Good afternoon, everybody. Thanks for joining our call. Just to give a quick overview about the quarter gone by, we have had a reasonably good quarter, and we continue to see positive trends, both in terms of pipeline and in terms of opportunities that actually presents to us. The entire ITES industry in India, or rather across the globe, is actually seeing a good amount of traction thanks to the acceleration of the digital transformation and acceleration of many projects that the clients are trying to do over the last couple of quarters. The initial challenges around COVID seems to have gone by, and people are making sure that they are keeping abreast with the latest technologies, more in terms of security and digital transformation as well. So that's actually giving us some opportunities, similar to how all our peers and the bigger IT companies in the Indian IT industry as well. So that we continue to see good traction in the demand across all the regions, particularly in Asia, and we've also seen demand picking up in Europe as well. The opportunity for specifically automation, digital services, and specialized testing, which is around testing the digital enablement, and also on security and performance has been growing significantly, and that's where we see maximum amount of demand as well. During the first half of this calendar year, we have added actually some key strategic clients. One client who is actually based out of Asia Pac, and other client which is a large global company which is operating out of India already, and they are strengthening their offshore and India presence. And both of them are looking to contribute to more than $1 million during this particular calendar year. Digital services continues to grow from close to around 14 to 15% of our revenues in December 2020. Currently, it's doubled from there, and it's close to around 29% right now. And we expect it to be around 33%, during the end of this calendar year. Our offshore business contribution has once again significantly changed, and that continues to change over the last 3 quarters, with more work coming offshore and some of the on-site presence reducing, which is actually good for us from a margin perspective, not so much from a top line. Currently, almost 60% or a little over 60% of our business comes from the offshore headcount, and around 40% comes from on-site, compared to 48% was the offshore contribution year on year if I were to compare 4 quarters back. So that's actually helping us in building a robust platform in India, and also in, helping us in making sure that we are able to forecast and anticipate the kind of demand that we can expect, and based on that we can skill and look at what kind of capability that we need to build as well. While the industry trends and the kind of heating up is also having a negative impact, primarily because the costs are increasing significantly. We are also seeing an increased amount of attrition similar to all our other IT peers as well. While that may actually have a temporary impact on our costs, but we don't see that having a large long-term impact. We expect it to probably last for another couple of quarters at best. The second wave of COVID also had some impact on us, because the spread of COVID was quite significant and quite rapid, and we also faced some impact with increased levels of infection within our teams, and we also had a few unfortunate casualties as well. And we stepped up the vaccination, we stepped up hypercare for our employees. We also had emotional health assistance, which we provided through external specialists as well, trying to work through the current stressful situation across both the team members and their families. We conducted a few drives in Chennai where we had the scale. In other places, we have been trying to partner to get our teams vaccinated. We are probably currently at approximately 55 to 60% of the teams getting vaccinated, and we still have the remaining people who have to complete their vaccination process, and which we are constantly following that as well. On the merger of the unlisted entities, which we announced around 3-4 weeks back, the process has started. We have applied, we have submitted our representation to the regulatory authorities. We are going through the process. The process would take anywhere between 2 quarters to 7 to 8 months. We expect the best case scenario to get this completed by Q1, the calendar year Q1 of 2022, that is March 31st, 2022. But give or take the kind of time frame that it takes nowadays due to the pandemic, it may probably happen either in March or latest by April. So given that, we will probably not have all the information about the unlisted entities which we can present here, because they still follow the same private limited company norms and regulations, which is not the same as what we do in terms of quarterly results and publishing. Apart from that, we have signed up for the facility in Coimbatore. We are doing significant amount of hiring and ramp up, both from campus and also in the early stages, and investing in the upskilling for the teams across multiple locations, primarily between Coimbatore and Chennai and Bangalore, and we expect that to continue. And we are also working on enhancing that to spread across Pune and the other locations as well, anticipating to be ready before the actual merger of the entities as well. So that's quickly about the past quarter and some latest updates. I'll pass it on to Desikan to cover the specifics on financials.
Thanks, Balaji. Good evening to all. We started the first quarter of FY2021-2022 with a revenue of INR 88 crores compared to 79 crores in the previous quarter. Growth was around 11%. We have reached a new benchmark in the revenue numbers compared to any of the previous years. EBITDA ended at 14.6 crores in the previous quarter of 19.1 crores. We did see a drop in EBITDA percentage to 16.6% compared to 24% in the previous quarter. Earnings per share has moved to 16.6% from 10.72 to 12.5 due to PAT ending higher compared to the previous quarter. Major contributor to the increased costs mentioned by Balaji was from salary cost and third-party consultant cost due to headcount increase. The third-party consultant cost is grouped under other expenses. That's the reason you see the increase in the other expenses starting previous quarter. This started from previous quarter, we did this change. Our third-party headcount increased to 336 now from 253 last quarter. Other than third-party consultant, we also incurred costs during the quarter, cost of merger program and some training. And we also had some rates and taxes reversal in the previous quarter because of the previous quarter we had a true up of rates and taxes. This quarter a little bit it shows a little higher amount. So that's about the reason for the change in the expenses. And then the other income, it also includes forex gain of 26 million. Last quarter we had a loss of 23 million. And looking at that is on quarter comparison. With respect to last year same quarter year-on-year comparison, we had a 16% growth year-on-year, with revenue ending 88 crores as compared to 77 crores in the previous year same quarter. Dip in EBITDA from 25.5% to 16.6%, majorly contributed by the same set of reasons what I mentioned before. PAT ended at 14.1% against 18.3% in the previous year same quarter. So this is the brief about the result. Now I'll open it up for the Q&A session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Mithun Avast from Kiva Advisors. Please go ahead.
Yeah, hello. Just wanted to understand this increase in cost. Is this more like a one-time increase? Because, obviously our EBITDA margins have come much lower than what we had guided in the previous call. So just wanted an insight on that. And what has driven this appreciable growth in the top line this quarter? Is it that we won several new orders? Just wanted your take in terms of what is the hiring number that we're looking for in FY22. And secondly, could you just give us a little bit of an update of the business which is getting merged and how, at least in terms of trends, how they are shaping up, even if you can't talk about explicit numbers? Thanks.
Sure. The reason for the cost increase, like what Desikan mentioned, are threefold. One is the increase in the third-party consultants. Third-party consultants it's actually it's the delivery team primarily, but instead of hiring them in our roles, we are actually trying to source it through consultants so that we can actually deploy them faster. Because if we were to hire laterals from the market, it takes anywhere between 30 to 60 to 90 days, depending upon what kind of notice periods that they go with. And that's the reason why we normally go through consultants for short-term requirements or who we need to hire, faster. And that is the reason. And typically what happens is that there is a time lag from the time you hire before you deploy them of anywhere between 3 weeks to 4 weeks, because it takes that kind of time frame to do background verification and all those other elements, because we service mostly financial services clients, and we can't just hire and deploy them. You see that now, because if you were to look at the growth, most of it is like it has a lag effect. So you will see this over the next couple of quarters as well as we see the demand. But it's not on one time. It's not something which is going to be a long-term impact per se. It will settle down as we start hiring more in the coming quarters as well. And the second element of the cost increase is like what Desikan mentioned earlier around the merger costs and some of the rates and taxes which we reversed in the last quarter, because of which we saw a higher EBITDA margin in the last quarter. So now there are no reversals, because most of the catch-up accruals and reversals happen only at the end of the financial year. So that's the reason. So there is no systemic challenge, and we still expect that we would be in that anywhere between 18 to 19% EBITDA margins is what our expectation is, even though it's not a guidance per se. On your second question on what is driving the growth, it's similar to what you see across the Indian IT industry. There is a lot of demand, pent-up demand, because of which was held up in the first 3 quarters of COVID, which is now surfacing, and everybody wants to try and accelerate most of the digital transformation program, because they want to reach to the customers faster as they see competition catching up as well. So that's the primary reason. So the demand is increasing, and primarily the demand is increasing in the newer technology spaces, and also the traditional testing spaces as well. And we see demand across Asia, US, and the European markets as well. And we have seen the change. If you were to look at the earnings presentation as well, it talks about the growth by region, and you could see that the primary growth has been in the Asia Pac and the Europe region primarily. And on the last question on the merger and the to be merged entities, the unlisted entities of the group, we don't, since they are private limited companies, there isn't really any quarterly, financials or audits that gets done. But if you were to look at the current trend, they are in line with what we were expecting, as part of the merger as well. And they are also growing in similar paces, because the industry as a whole is growing, and we are just trying to keep our growth pace as faster than the industry. And they are in line with whatever expectations that we have in terms of the merged entities numbers as well. Desikan, you want to add anything more?
No, I think you have summed it up very well.
Thanks. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Ashish Dash from Sharekhan. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, you mentioned that EBITDA margin would be 18 to 19%, and this quarter it's around 16.6%. So, do you mean that on sequential basis there would be improvement for the remaining quarters, and when would you take the wage hike?
Yeah. So, like what I mentioned, the primary reason for the cost increase or the EBITDA margin to go down is around the third-party costs, third-party consultants whom we are hiring, to deliver. And, depending upon when they get hired and when they are able to bill is where the lag is. So some of the growth which happened in the month of the last part of May and June, we have to hire and keep them for 3 weeks or so when their verification and all those kind of stuff happens. So that is the reason why there is a lag. Over a period of the next 2 to 3 quarters, it will all settle down because the pipeline will become streamlined. So we expect that for the financial year, we'll still be in the range of around 18%. And in terms of I missed your second part of the question.
Salary hike, I asked.
The salary hike is calendar year, so our salary hikes actually happen in January. But the kind of pressure that we are seeing on costs, particularly on compensation from the industry, the kind of the salary increases that we are seeing in the market, we may probably have some impact when we do the salary hikes in January. But we are still confident that we should be able to manage some of the other levers if we are able to increase the offshoring percentages and other stuff.
Okay. You are mentioning that in Q4 FY22, you will take the salary hike, right? Hello?
Yeah, sorry. Yeah, we lost you in between.
Okay. I'm asking when you mentioned that January is the cycle for your salary hike, so you would take salary hike in Q4 FY 2022.
That's right.
Correct. Okay. And sir, on the revenue side, last Concall you mentioned that the growth would be between 15 to 20% in FY 2022, but the Q1 sequential growth has been even strong, 11%. So you are saying that demand is strong, you are hiring third-party consultant and all these things happening. So the growth momentum on sequential basis, can we expect to continue for the remaining quarter?
Yeah, we expect that it will continue for the remaining quarters as well. Q4, that is the quarter of October, November, December, normally gets a little slowed down because of number of holidays. But overall, I think for the financial year, we should still see the 15% plus growth that we talked about.
Sir, on sequential basis, I'm asking, on this quarter you have reported 11% Q1Q. If this happens, this run rate goes on, so it would be the growth would be around 25 to 30% year on year in FY 2022.
That's what I'm saying. So your Q4 or Q3 of the financial year, considering that the number of working days will be much lesser compared to the other quarters, and most of the countries go on holidays and other stuff, we may have a small, plateau there. But other than that, the rest of the quarters should still see, the one which we're talking about sequentially at 10 to 15% growth, and that could end up anywhere between 15 to 20%.
Okay. Sir, on last question, your top 5 client growth has been even strong for last 2 quarters. So could you please highlight or give some color why, how the growth has been so strong for top 5 clients? What has happened there, and how these top 5 clients would continue to report strong growth?
Yeah, so it's not the same top 5. So that is what I had mentioned in the initial comments as well. We signed 2 new customers between Q4, that is calendar year, that is October, November, December 2020, and the Jan, Feb, March 2021. We signed 2 new clients who have actually now moved into our top 5 as well. Primarily, these 2 clients are actually contributing to an accelerated growth. And our existing customers, like I mentioned earlier as well, saying that we have done investment in sales and client engagement teams in Spain and in Belgium, that we have some of our strategic customers, and that's showing some results as well.
Okay. So my last question, if I can, last Concall, you mentioned that the combined entity cash position was 277 crore. So any number around that as of June 30th, 2021? And as we mentioned that there are supply side issues and some margin impacted, with some margin impacted for our entity, Expleo Solutions. So is there, can you give some qualitative commentary? Is there any impact on unlisted companies' margin?
On the cash side, I think we have what we have is 131 crores is our cash balance. We don't want the number of the unlisted company since it is not audited. So I can tell that only for our listed company. And I'm sorry, I missed the second question. Can you repeat it if you don't?
There are supply side issues in the industry. So any qualitative commentary from your side? So how our margin for the unlisted entity was 19%. So is there any impact also for the unlisted companies on margin front due to these supply side issues?
I think Balaji was mentioning about the unlisted company, that on an overall trend, it seems to be in the same trend of what we saw in the month of March that continued. But on the margin side, it is generally doesn't have the quarterly things have ups and downs on this. So we don't see any much changes in that. But once the quarter moves to the second and third quarter, that we will have a more known numbers which will come out rather than the first quarter to look at it.
Thank you so much, sir. I have more questions.
The supply side issues, Mr. Das, the supply side issues are not impacting what we are delivering to our customers right now. So.
Okay. Thank you, sir. I have more questions. I will come back in queue. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, and hopefully I'm audible. Congratulations, Balaji and Desikan, on very strong traction on the customer side. So Balaji, if you can just give a little more color on these two large customers, in terms of what segment they are in and who, were the competitors for this piece of business, that would be helpful to start with.
Sure. So one is actually a large payment technology company who have customers and their own services across the globe, and we are actually servicing them, through their own center in India, and we are doing it through their own center in India for multiple geographies, including their US operations and their European operations, and also the Middle East operations as well. So that's one customer where we have been growing quarter on quarter sequentially for the last three quarters. That was signed sometime in November, the first week of December of 2020. And the second customer is actually another multinational insurance carrier, but this is signed in the Southeast Asian market, covering across Singapore, Malaysia, and Indonesia. And this is also for their digital transformation program, and how we are helping them in both in the quality assurance services and also in security and performance engineering services as well.
Great. And any update on the US side? Have we hired? I think we hired some people last quarter, if I remember correctly. So
that's right.
How's that coming along? If you can just comment on that.
We hired a person last quarter, and he started, the traction, and yes, the pipeline is something which is coming up at this particular point of time. We are also organizing a couple of events and road shows in the US by end of September and early October as well, just to try and create some brand visibility for ourselves. And there is a inside sales team which we have dedicated for the US market as well, which to try and build some of the leads and opportunities through him. And we expect that we should start showing some results starting from the next quarter onwards.
Got it. And just on the numbers, if I look at your other expenses year-over-year, they have gone, from 16 crores to over 30 crores this quarter, right? Year-over-year basis.
Yeah.
So, whereas the revenue year-over-year has gone up by 12.2 crores. So obviously, you won't be hiring these consultants at a negative margin. So I'm assuming the merger cost must be also a big chunk in that 30 crores number. So any color on that?
But predominantly, it is only the third-party consultant increase. I was mentioned you about the number of people, almost 100 people increase. But compared to last year, it is much more. Last year same quarter, we had around 120 to 130 third-party consultants. Now it has grown up to around 300 consultants. So that's the reason you see the big increase in the third-party consultant cost. As far as the merger, it's in the range of around 20 million is the range what we have spent on the merger related expenses.
And you would see that going through in the next few quarters also, basically?
Which you are talking about the merger?
The merger cost. Yeah, the merger cost.
Merger cost will reduce because major part of the things has been done. Now only it's the milestone which is pending is the SEBI and there are only two things. One, we need to get the stock exchange and SEBI and NCLT. So there it's only a part of the cost will be coming in. Not major cost will come in. Most of the cost is got done for all the DDs and other related items.
Okay.
Yeah, but one thing which, Jessica, just to add, there is one big element of stamp duties.
Stamp duties, sorry.
Part of the mergers. Yeah, that's a huge component.
That's a big one. Yeah, that's a huge one.
And that will happen when we get the final NCLT approval, which is expected either in March or April.
May. Yeah, correct.
Okay. And any idea what that cost would be like in amount terms?
I can check and get back to you because it depends upon the number of shares we issue as well as the certain ball. I'll get back to you on that.
Okay. And lastly, what was the contribution from the group in this quarter, and did it increase compared to the last quarter?
It was almost flat. It was around 21% of our revenue was from the group.
Okay. So it seems that then the growth in the quarter was predominantly from the initiatives that we have taken, right? That seems to be going at a much higher clip then.
Correct.
Yeah. I just want to, clarify one point there, Rajesh. While we said the group revenue is still 21%, the engagement in countries like Spain and Belgium, even though it is actually a direct client of ours, the selling and client engagement is through the group because while we are reimbursing or we are having a salesperson for us dedicatedly, but it's actually managed through the group. So that also is a significant contribution. So if you include that, I had mentioned this some 3-4 quarters back as well. If you include that, the group contribution is almost 45%.
Right. But what I'm saying is compared to the last quarter, if you include that in the last quarter also.
Apple to apple comparison, it's still flat.
Yeah. So that means your other business is growing much faster than the group business.
Yes.
Consistently. Okay. All right. Understood. Thank you. If I have more, I'll get back in with you. Thanks.
Thanks, Rajesh.
Thanks, Rajesh.
Thank you. The next question is from the line of Rahul Picha from Multi-Act. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, firstly, wanted to understand the growth outlook better. So, you are saying that this year we could end up achieving 15 to 16% growth. But when I look at our Q1 numbers, and if I were to analyze the current 88 crore run rate and compare it with what we did in the last full year, we did around 301 crores. So that itself works out to about 15-16% growth for the year. So are we not expecting sequential ramp up from here on, or we expect to grow much more than 15-16%?
If once again, I don't want to make it look like we are doing a forecast of what our numbers are. The expectation is that we will continue to grow at more than what we are at right now, because even in this particular quarter, there is the next quarter, Q2 of the financial year, we will actually see an even larger growth as well. So, the expectation is that we will certainly cross the 15-16, but that's the modest target that we want to go with at this particular point of time. So we expect that we'll probably be in that 90 crores plus is what our expectation is.
Got it, sir. And sir, could you also please give us what is the constant currency growth for the quarter? Hello.
Yeah, sorry.
Sorry, no, I can give it. Sorry, no, I was on mute. Sorry. On the quarter-on-quarter, the constant currency growth was 10.3%. Year-on-year, it is 12.8%.
Okay. And sir, on the headcount, could you please share what is the employee count including subcontracting end of June 21 compared to what it was a quarter back?
The subcontractor is around 330, and including the employee, it is
1,470 is what?
1,470. Yeah.
Okay. And sir, what would be our utilization in the first quarter?
Around 83%, 83 to 84%.
Okay. And what would be the optimal utilization for us?
85 to 86 is what we normally target.
All right. So last question from my end, sir, on capacity office space that we have at a group level, what is the kind of headcount that it can accommodate? And after this new Coimbatore thing that we have done, what would that capacity increase to?
So the Pune entity has a lot of capacity because it's an SEZ location. It's a 2-acre campus, and the current constructed capacity, it's around 1150 to 1200, out of which only around 800 is being used. And then there is another bare shell which also can accommodate another 700 to 800. So the merged entity, our current capacity itself will actually, that is including the Coimbatore one and all the other centers put together, our current capacity itself will actually take us to close to 4,300. And we expect that, as part of this new normal of work from home, we expect that at least 20% of our population will continue to operate from home even after, even post-pandemic. So that should actually give us a capacity of at least 5,500 to 6,000 people with whatever facilities that we have got right now in the merged entity or going to be merged entity.
Okay, got it, sir. Thank you for answering my question.
Thanks.
Thank you. The next question is from the line of Rajesh from Zenith. Please go ahead.
Yeah, good evening. My question is what are the challenges that you foresee with the merger, and what kind of opportunities that you foresee with the merged entity?
Challenges with the merger, it's two different entities, and obviously the challenges is basically to make sure that we are able to integrate both people and processes effectively, and that's the challenge with any merger, particularly in a services industry. The importance of people is very, very important. That's the most critical element, and so that is what will probably be our endeavor to make sure that we do that right. And in terms of opportunities, there are plenty of opportunities. The first thing being, the entire engineering capability that we can take to our direct customers, and the opportunity of trying and leveraging more work from the group now that we have an end-to-end, capability in one entity rather than, going between multiple entities, which was the case earlier. So both of those put together, we are quite confident that the kind of opportunity that presents, is quite strong, and we'll continue to drive our growth over the next at least 2 to 3 years.
So can we see more traction from the US business in that case?
Not from the US business, I'm saying from the group, because US business, I'm sure, if you were there in the last call where Rajesh Krishnamurthy was also there, post the merger. The US business, the group is not, we have close to around 70-80 million worth of business from the US. That's not the biggest forte. Our biggest strong geography is still Europe, and we still have a lot of opportunities which we haven't tapped there in Europe itself.
Mm-hmm. Okay. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Vikesh from ONGC. Please go ahead.
Yeah, just one question. Can you give some idea of what is the order book position of the Expleo, and what will be the order book position for the merged entity at this moment?
Desikan, you want to take that?
For the merged entity, it will be difficult to tell that. Only we can say about us compared to what we have. We only follow ours. We don't get into that as of now. For us, if you look at the order book facility, for this quarter will be a major quarter for us, where we will have we have Middle East going in, and also APAC also. We are seeing more traction coming in out of the existing client, which will grow in the APAC. And we see some traction from Europe, as well as some of the clients also is coming out in the US. So that way, we see that we will be achieving little more than what we thought in the quarter 3 and quarter 2 of the financial year. Quarter 3 will be a little bit slumped, as Balaji was mentioning that we have holidays and leaves coming in. There we see a little bit slump, not the greater extent, but we will have a slump in that's the more traditionally is our little weak quarter, what generally we have. And quarter 4 is we see that it will be like a little bit higher to around 10-15% higher than what the quarter 3 will be. That's the way it is, and we see that more traction. It is more from an angle of how we are going to serve them is the thing which is going to come in. Because the demand is there in the market. We need to time the demand and get the people and supply it. That's the more challenge currently we are facing into.
Okay, but can you give some idea about quantified numbers? Like you said, 15% more, 18%. No idea on quantified number, because in other companies I get to hear quantified that our order book position is like say 400 crores, something like that.
Generally, we don't give a guidance. That's the reason we are like consistent and giving a quantity-wise percentage, because that becomes a guidance statement from us, which it is not something which we do. We can generally give an overall kind of how the trend will be in each quarter, what we are coming out until the end of the financial year. Giving a specific percentage will also always be we generally don't do that. That's the reason we stand in giving it. Yeah. But overall, what Balaji said in the year-on-year, we are looking at something around 15% is the one which we are saying there. But on a quarter-on-quarter basis, it will be too detailed for us to even give it as a guidance.
Okay, fine. Yeah,
Thank you.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, hi Balaji.
Hi.
Balaji, just 3 questions. So one is, we are at almost 89 crores in this quarter. So from the industry in general, other companies were bigger than us, but still not as big as some of the major ones, are growing at 4-5% on a constant currency basis sequentially. So is it something that we can do, or do you think that given we are not in the largest market, it will be a challenge for us? Just wanted to get your perspective on that.
You're saying 4 to 5% CAGR on constant currency?
Yeah, sequentially, right.
Yeah, we are currently, this quarter we have done around 10.3%, and we are confident that we should be able to continue at least for the next 3 quarters in that either a high single digit or in double digits in constant currency.
Sequentially, you're saying?
Sequentially, yeah.
Oh, okay. So got it. So just as a side note to this question, I mean, we've not grown like that. In a very long time. So just from an organization perspective, are we geared up? I mean, in terms of bandwidth of maybe middle management. Is there something that from that thing because that kind of growth is.
I'm sorry to interrupt. So your voice is breaking.
Yeah, I get the gist of it. You are saying that whether we are geared up for that kind of growth? We are, Rohit.
Yes.
We are building that capability, and we are leveraging the full benefit of what the group offers as well. Because if you recollect 2-3 quarters as Rajesh joined, we made that announcement around what the group is doing in terms of consolidating all the capabilities and competencies, with under digital capability and also on automation and quality capability as well across the globe. And that capability is something which we are leveraging to the maximum extent to make sure that that particular team guides the the middle management team here and also helps us in recruiting the right kind of talent as well.
Sure. The other question was, I think in the Concall that happened sometime back after the merger, I think Mr. Krishnamurthy said that they at a global level there is a target to sort of increase the overall offshoring from single digit to 20% or so, or 25%. Has that process started? I think you mentioned that this quarter also the group business was sort of flat. So, is it that once the merger has happened, only then the process will start, or just wanted to get some sense?
Yeah, the process has started. There is a specific governance around what is being offshored and how it is being offshored. But most of it is around the engineering business where the offshoring percentages have been traditionally very low. So once we do the merger, you'll probably start seeing a lot more traction there, because that's where the focus to increase the offshoring is, because that's the low-hanging fruit, and that's where the maximum number of opportunities are.
Right. And typically, engineering services is a higher margin business. I'm not taking what numbers you've given because I think there was some one-off there in terms of COVID, etc. But in general, is that business a higher margin business in general? I'm asking, and going forward also, would that be a margin accretive for our business? For the listed entity?
The margins are not very different. It's slightly lower than the typical IT services margin, but it's not very different. Particularly when we do offshoring and particularly when we do the transfer pricing through the group, the margins don't differ much, because it's end of the day a cost plus when the group business comes in.
Right. Okay. I think that is pretty much it from my side. Thank you very much, Balaji, and all the very best. Thanks.
Thanks, Rohit.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah. So thanks for the opportunity. Most of my questions have been answered. So just on the financials of the unlisted company, you said they are private limited and they don't do the quarterly thing. So when will we get to know these financials? Will it be half-yearly, or will it only be after merger that these financials will be disclosed to the shareholders? Generally, the way it happens is it will be around the end of the year. They have their own audit cycle where it starts around January, February time frame for them to close it for the 31st March. So that's the time we expect that we can get audited numbers from them. Okay. So until that,
our date of
Go ahead. Sorry. And also the date of our date, if you see the merger date, the date is also 1st April 2022. So maybe at that time we will have the full-fledged financials of all these three. After that, post that once that audit is over, then we will have some numbers in place so that we can provide it to everyone.
Got it. Sir, and when you talked about, our current capacity and you adjusted it for work from home and you said it's 5,500, this is including, the recent announcement that you made of Coimbatore increase of capacity and recalibration in Chennai, or that will be over and above that?
Yeah, this includes the Coimbatore capacity as well. We have rationalized some of our premises in Chennai, and we are looking at primarily utilizing Coimbatore and the spare capacity that we have in Pune.
Okay. Sir, and this capacity you expect to utilize at the group by FY23 end? Is that the plan?
Yeah. So like what I mentioned, the Pune capacity, there is only one part of it which is ready and which we can use right now. The other one is a bare shell at this particular point of time, which we will develop, or which we will fit it out once we have the right level of demand. And including that premises, by 23 is when we expect that demand to be fulfilled.
Okay. So and lastly, on the engineering R&D piece, if I look at the Expleo group, I think about more than 60% of its revenues are in R&D. Could you give us some color on the kind of services that they do? Is it software, mechanical, electronic, and is there any peer set, that are they like, say, the LTTSs of India, or is that different? Who do they compete with? Because over time, this would become a larger piece of the merged entity. So something on that. Thanks.
Yeah, so the engineering services, the key elements which are done from India is primarily around what we call it as emerging engineering services, which is around embedded systems and software design and software testing and software validation for the automotive and avionics industry. And the other one is the mechanical industry, which is around the plants and setting up of plants and setting up of assembly lines and the assurance around those particular services. These two are the major ones. The third, which is fastest growing even in that segment, is the digital services within the emerging engineering services as well. This is around embedded systems and the automated car and the electronic vehicles and all those kind of elements as well. So these are the segments which are growing faster. And on your question on when the entity gets merged, the entity that is getting merged is only around 78% or 80% of the listed entity at this particular point of time. They are not larger than the current listed entity. But the expectation is that it will grow faster because as they start doing more offshoring.
Got it. Thanks for taking my question, sir, and all this. Thanks.
Thank you.
Thank you. The next question is from the line of Subhash Naik from Tridap Capital. Please go ahead.
Thanks for the opportunity. If I'm correct, you said you will have utilized the capacity of 5,000 plus people by FY23 end or calendar 23 end?
The expectation is by calendar year, by December 2023, give or take 2-3 months here and there, which will basically complete the financial year as well.
So that's typically what we are assuming, that is more than doubling the capacity. We are at 2,300 today, both combined between Pune.
No, we are at 3,400 today.
3,400. Okay. 3,400 will go to about 5,500 in the matter of 2.5 years.
Yeah.
So that accounts, and you say your optimum utilization is about 86%. We are at 83 already. So what kind of manpower addition plans are there for the next 3 quarters? If you can share that.
So we are currently hiring at the rate of around 110 or 120 people per quarter. net addition, because we also have an attrition challenge as well. So the net addition is around 120, 125 in terms of employees, and another close to around 75 to 80 in terms of contractors. So that's what we expect for this quarter, that is the Q2 of this financial year. It will slow down a little bit for the October, November, December, but once again we expect that the first 2 quarters of the next calendar year also should see similar kind of a demand. We can't foresee beyond that at this particular point of time.
Second question I have is about the margin profile. Once you combine both the entities, can you just probably give us some guidance about what kind of margin profile we are looking at? Are the margins similar between Pune and our entity, or are the margins different?
I'll probably have Desi can give you more details, but at this particular point of time, that is as of the March 2021 EBITDA numbers, the Pune entity is slightly more than what the listed entity is, but the Bangalore entity is lesser than what the listed entity is. Combined between the two, it's almost the same. Jessica, you want to add anything more?
Yeah, correct. The Pune entity as of 2021 was slightly higher on the EBITDA side. So around 26% was that, and ours around 23.1%. That's the way we ended last year. Of course, technology was around 15.6%. That's the way, and the combined was around 22.2% as of 31st March 21.
And with this kind of 10% kind of a growth on last question, can I ask for last question? Hello?
Yeah, go ahead.
Yeah. With a 10% kind of a Q-on-Q growth, which is a very strong growth we are talking about, would it also impact our margins? It would give some leverage there?
In the shorter term, yeah, it will have some impact on the margins because we need to invest in building that capability and competency. But in the longer run, that is over a 3 to 4 quarter time frame, it should ease out as we build the pipeline and streamline it.
Okay. Thank you. Thanks for that.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, sir, within engineering R&D, what would be the pecking order of our parent in the world listings, or how are the top 10 engineering R&D firms of the world? This is one question. And second is, for the hiring part, will we be comfortable with hiring much more and having some kind of a bench strength rather than be short of talent in some quarters to come? And how will we strategize that? And third, do we see any kind of a cultural or any kind of issues in integrating both the firms, as far as management structure or the leadership, or even the because we've had 2 different leaders for both the companies, so and we propose to continue with that arrangement as a separate business unit. So do we see any kind of cultural issues in integrating both firms, which are actually in very, very different verticals?
Okay, I'll probably go from the last one. We don't see any cultural issues because we have always been part of the same group, so that has never been a concern. And it's not 2 different businesses because the Pune entity, 90% of the business has always been on the quality side of the. It's been on quality assurance, which is similar to what Expleo Solutions have been doing. So it's not very different. It's only the engineering side of the business which is different than what Expleo Solutions was doing. So we don't see any cultural challenges there because it's under one group and under one management, and most of the cultural elements and the policies and procedures are all defined at the group level, which is what with some amount of flexibility of what we are able to do in India. On your second question on bench and what we are trying to do in strategizing for building the supply side or building the capabilities or the capacity, we've always had a small bench to cater to our future demand, but the demand nowadays is higher than that, and the challenge always is that you can't keep people idle and with the kind of demand that the others are seeing now, the guys whom we keep idle are the ones who will get targeted first as well. So at this particular point of time, the objective is to try and keep it as optimum as possible, and that's where we are using some of these third-party consultants and some of them who are able to actually supply us resources on a shorter time frame, even though we have to spend a little more. But our objective is to try and make sure that we tap into the demand, get into the customer, which will help us and grow in the future as well. On the first question the first question was around R&D and where we are in the pecking order as a global engineering company. We are certainly there in the top 10, but where we are is something which I also need to figure out through any of the Gartner reports and others, because we've also figured in some of them, but I don't have the exact pecking order. We are certainly there in top 10 for sure. Whether we are in top 5 or whether we are between the 5 and 10 is something which I need to come back to you.
So would India be the first option for any kind of outsourcing that they would like to do?
No, there is already another engineering offshoring center in Romania, which the group has. So depending upon what the languages are and what the kind of capability we are able to build here, it will be between Romania and India.
So Romania would be for which language?
All the Eastern European languages, and also considering that it's part of Europe, you have German capability and others as well. So, in the engineering business, the language capability is only that much. It's more the technical capability which we have to build, which is what we are trying to do as well. So, and there is really no preference between where the work will have to go. It's the question of where we are able to build the capacity in the fastest possible time frame.
The scaling up could happen much better in India because of the sheer engineering population that we have.
Yes and no. It's the question of whether we are able to tap into that as well, because the kind of demand that we are seeing in the market right now, we need to make sure that we stay competitive.
Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, we take the last question from the line of Zohair Nasir, an individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. My question was mainly around the date of the consolidation. When is it expected to take place, and when is it expected to show on the books? I think the last question you answered, you mentioned that you're expecting it to close by 1st April 2022, if I'm not wrong.
Yeah,
that's right. Yeah, that's right. Yeah.
Good.
Yeah, and we can expect it on the books by Q1 23?
Yes, that is the current thing. After getting the approval, we'll be doing it around the first quarter of next year.
Okay. And just another question that I have is, as of the moment, what is the cash balance on the books, and is there any plan on the dividend front of it?
Now the current thing, we have around 137 crores in books. That is the current balance of cash what we have as of the quarter ending. And if you look at it, the current focus is more from a successful merger of the entity, one subject to the approval of the authority and shareholders. Having said that, we are formulating the dividend distribution policy. So the plan is to get it done before the end of the year, the calendar year 21, and we'll be bringing up to the board for the discussion for dividend by maybe early CY 2022. We'll be having the discussion again.
Okay, got it. Thank you.
Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yeah, thanks, Stanford. Thank you so much for the active participation in the questions and the interest shown in us. We are looking forward to an even better quarter coming up, and stay safe. Take care, all of you. Thank you so much.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Expleo Solutions Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.